Thank you very much, everyone. I do want to reiterate that the partnership that we've had with Marty and IvyFON has been tremendous. Before coming here, I asked our investor relations team, I was like, hey, how's the relationship gone? They're like, oh my gosh, like these guys have brought quite a few clients for us. We've made them quite a bit of money. So we're excited and we're here to continue to deepen the relationship. Speaking of interns, I mean, yes, everybody at Stanford wants to be an intern at Pantera. It almost has become sort of like you become an intern at Pantera and you're sort of blessed that the next thing that you want to do is going to be fruitful. And I guess the other thing that I wanted to just kind of hop on as Marty brings up the slide.
I'm going to get the text.
Yeah, it seems like that might be frozen, so I might have to live for a little bit. Is really, venture is tough. It's a long game. And as someone mentioned right before I got up here, you don't know when you're going to get your liquidity. The interesting thing about crypto and tokens is there's actually a path towards liquidity, depending on how you want to go about it. You need any
I need this.
Go for it. It's almost like liquid venture. That's sort of what you get in cryptocurrency. You can invest into equity, which is sort of like a longer term thing, or you could actually just buy and sell tokens just like any other active hedge fund with full liquidity, or the in between, which is you can invest into venture, yet be give or take fully guaranteed liquidity in that venture within 4 to 5 years based off of tokens unlocking. So it is a very interesting and different type of vehicle that we can produce with venture-like returns. So venture-like returns mixed in with good liquidity. So I guess
you should just go, and when that guy comes, he'll be in a minute or two.
Yeah, exactly. I mean, why don't I start off with a little bit of what I remember from the first few slides, and then if the slides don't pop up, I'll just grab them from my phone. So yeah, again, Pantera Capital. Excited to be here. I'm going to start off by giving a little bit of background on myself, a little bit of background on the firm. I'll then go through our track record and what we've done in the past. And then I'll talk about some of the areas of interest that we think are just opportunities to invest into in the space. And then lastly, I will talk about what we see for the future for crypto. What are some of the things that are really going to push the space forward, some of the different types of things that we're looking at that are very exciting. So, to kind of go into, well, actually, before I go into this first slide, I used to ask how many of you guys have heard of Bitcoin, but I feel like that question's a little bit dated now. How many of you guys actually own even just a little bit of Bitcoin? Okay, all right. So I'm sure there's a lot more of you guys. You guys don't have to, just share too much there. That's helpful. It looks like the space has matured a decent amount. So Marty, are you able to start moving slides or?
Oh yeah, I can move. Yeah,
perfect. Yeah, let's move to the next slide.
This one, give me a second here.
Yeah, no worries. All right, I'm gonna move myself. Pantera is
okay. There you go.
Great. So I guess a little bit about me. So I've been in the space now for 11 years. As Marty mentioned, me and Dan are the first VCs to ever create an entity focused on investing into venture in exclusively cryptocurrency assets. It started in 2014 as focused just on equity because you can kind of go out there and buy Bitcoin on your own, or we have a Bitcoin fund that we started around the same time for those that don't want to manage their own accounts, and that Bitcoin fund was investing into Bitcoin was $40. So we recently hit 1,300x returns for that fund. But again, you can go out there, there's ETF, you can buy Bitcoin right now. We subsequently launched the VC fund, and that's when I joined in 2014. Before Pantera, my career has been mostly in venture capital. I was at a fund focused on mobile. So I'm used to being very early into disruptive spaces. As you know, mobile has been tremendously large, and I was very early in using data-driven strategies to find really interesting mobile apps for us to invest into. Caught companies really early like Snapchat, but I felt like, mobile was getting saturated. I need something that was a little more cutting edge. Here we are, cryptocurrencies, blockchain. So with Pantera, I've actually done quite a bit. I've sourced most of our deals. I lead the investment team on a day-to-day basis. I come up with our strategies, and I've hit on 22 unicorns out of 220 investments. So it's about a 10% hit rate on unicorns. Wow. Not bad at all, right? Let's go a little bit more into the firm. Next slide. Firm was founded by Dan Moorhead. So he really is overseeing the entire firm operations. He used to be the CFO and head of global macro trading at Tiger Management. You guys heard of Tiger? Probably. Okay.
Yep.
Great. So again, we manage about $5 billion right now, and it's in a mixture of hedge funds and venture funds. I won't get into too much details. I'll talk a little bit more about our venture fund later on, because that's usually a way for folks to kind of get into the space. They're used to private equity. They're used to long-term holdings. They don't want to pull out too early in a hedge fund. So, I'll give you a little more details on that. Let's go to the next slide.
A second. Yep.
Maybe. All right. So just a little bit of about us on a glance. I mean, 246 projects, 22 unicorns. The only other things worth noting here are really, we are a large fund, one of the largest in the space. It's us, Andreessen, and another fund called Paradigm. I think for us, we differ in that, we actually still cater a lot to the family office side of things. We're very approachable. We have low minimums, and we have like a very transparent community-based approach in terms of how we deal with our LPs. Do a lot of events. I mean, we're really kind of like the community fund, just at scale. Because of our size, we do lead most of our deals. So 75% of the deals we lead. We take a very global approach, which is also different from some of the larger funds. We think that, competing against the Sequoias and the A16Zs and putting very high valuations sometimes is warranted. But if I can go to Latin America, where there's a pretty big need for digital gold and the tokenized dollar, and someone to solve this remittance problem, which is like $50 billion between US and Mexico using cryptocurrencies, I can get a much better valuation investing to those companies and potentially, again, like larger returns. So we take a very global approach, and it really starts off with, I'll get into some of our thesis, but like we're investing into Africa, we're investing into Latin America, Southeast Asia, and we do so because of just our network that really helps bring deals to us. All right, let's go to the next slide, Marty.
Yep.
For those that are invested into the space or following the space, these are some of the brands that we have been a part of really early on. Ripple, as you know, has done very, very well, very institutional brand around cross-border payments. Also very early on in Circle, which is the pioneer of the tokenized dollar. And then other use cases up here for those, now we start getting to names that maybe aren't as familiar. Newer blockchain technologies that enable us to move from, let's just say, back in the day when the internet was on a 56K modem to cable and fiber internet. We have invested into infrastructure that is making blockchains a lot more scalable so that we can enable things like payments, enable transaction throughput that is equivalent to Visa, but all on decentralized architecture, very, very low fees. And then anything else to call out from this? No, I mean, a couple of AI deals. You got to get those AI deals in there, right? But again, really, really successful companies that we've invested into. Let's move on, Marty. So this is how we are broken down from an AUM perspective. I guess I'll touch on each of these strategies a little bit. We have about $3 billion into venture style strategies. Venture style means we're investing into, example company would be Coinbase. They're not going to launch their own token. They've actually launched their own like developer platform, still no token. They're going to be regulated. They're going to be working with institutions. They're not going that route. We're getting equity. We're going to hope for an IPO. That's venture style investing. That's what a lot of you guys are known for. Hedge fund style. It is active trading of cryptocurrencies. There's Bitcoin, there's Ethereum, but there's 1,000 other cryptocurrencies. Some are very speculative, but some actually have really, really real use cases and actual real utility. So we are making sure that we are in a diversified basket of tokens that will outperform if you're just holding Bitcoin or Ethereum. Passive investing is, we do have a passive tracker for those that are just like, look, I mean, I just want something that just tracks the market like the S&P, but this, the equivalent for crypto, it is a mostly sort of management fee-based vehicle where you can get the top 25. And then the last strategy that we have on a high level that we do is this thing called special opportunities. It ranges from being able to get high discounts of growth stage companies, whether they are equity or tokens, and being able to do so because we have a very strong brand and can provide a lot of value to these companies. And then we promise to be longer term holders, especially for these discounted tokens. So I'll give you some examples.
And that's staking, should we call that?
No. So examples of special opportunities, Chainalysis, they're like the big data forensics company in the States. A lot of investors got into that last round, $9 billion valuation. There's an opportunity to buy secondaries because a lot of those investors, just kind of left the space for crypto. We go in there, we're buying it at $2 billion valuation. And it's again, we call it the special opportunity that a lot of funds just don't do these secondaries, right? We're buying it from management, we're buying it from like early stage investors in the company. Or there's I don't know if you guys have heard of a protocol called Solana. It's a unique one where there's actually still a team very involved, unlike maybe Bitcoin. And you can actually, for us, we bought Solana at $60, which is, at that time was probably a 70 to 80% discount to spot. And we have to hold that position for 3 years. I mean, invest along the way, but they're not going to let any Joe Schmo like buy, this token at a 70, 80% discount.
What is Solana today? What is Solana?
The price of Solana today? Over $200. I mean, we bought it at $60 and it's, it's already up 3x on that thing.
So Dan presented once, and it was probably 5 years ago. And he said, a lot of people say, we've been really lucky with Bitcoin, et cetera, but the best deal he ever had was staking Ethereum. And he got involved in Ethereum in staking it when it first came out.
Okay. Yeah, no, I mean, we were involved with Ethereum really early on. And, when we do get involved with projects, we want to be fully aligned with them. So we actually promise to hold these tokens. And in promise for that, we actually get yield. So there's a lot of fixed income opportunities with some of these larger protocols where you can actually stake. Yeah, go for it.
So in your fund, are you guys like SEC registered?
Yes.
So here's my next question.
Sure.
Hedge fund or your passive.
Sure.
With the hedge, you're rebalancing, right? Every quarter, or you're having to do trading, correct?
Yes, we thank you very much for giving me the microphone. Yes, we do. I wouldn't say we rebalance, but like as we're forced to rebalance it, basically we evaluate the portfolio on an ongoing basis to figure out both from a exposure perspective, are we exposed enough to the market or too much to the market? And then the other part is like looking at sector weightings within the hedge fund. Are we appropriately weighted across the sectors? Because each sector within crypto has its own like risk reward profile. So where we are in the market, should we be, let's just say 30% in safer blockchain infrastructure? And then should we be, let's just say 5% in something like AI where it's still very early, maybe a little bit more speculative. So that's kind of what we judge on an ongoing basis. Yeah.
When you do your rebalancing, do you always trade on exchanges based here in the US? Just background, I put together an RIA to be SEC compliant.
Yes. I know where you're going at. These are questions that we've had to deal with. Yes. So that's question one. Sure.
You did it with the exchange suitability questionnaire.
Sure.
On your passive approach.
Sure.
Like an index.
That's rebalancing. Yes, that's correct. Yeah.
So and but you have all the tokens kind of like in an index, but they're not like. I'm just wondering, like, how do you?
Yeah.
You know where I'm going with the question.
Sure. So I'll work backwards because I think that it's easier the way. So on the token 25, it is the top 25 tokens rebalanced on I believe it's on a weekly basis based off of market cap. And we have the infrastructure to sort of do that. And going into your first question around how we do trading and custody, of course, there's a custody rule for RAs. We do custody as well as we can. There's some tokens that are really new and we'll have to wait a bit on, qualified custodians to be able to support them. So custodians that are qualified or have the licensing would include Coinbase, of course. There's guys like Anchorage and BitGo and maybe even Gemini and some others. So, we're always working with qualified custodians. We have risk parameters and risk protocols around custody and moving funds in and out of counterparties. And then in terms of counterparties, either direct counterparties or counterparties that deal with exchanges, we trade on US exchanges. I think, knowing that foreign exchanges are blocking US investors, we don't want to get in that game. Okay, great. So hopefully,
one more question?
yeah, sure.
Yeah, so there seems to me that
Yeah.
there's a difference in mindset, and obviously there's a lot of people that are BSing you where they bought the Bitcoin, but
Yeah,
it's different if you bought it at $40 or $400 or $4,000. But even
Sure.
if you bought it at $40,
yeah,
40,000, because from a technical point, you'd see people say, well, Bitcoin could easily go down to $60,000 and trade around it.
sure.
So what's the mindset of a person who goes into something like that? Not a person that bought like you did at
Yeah,
$40
sure, of
and
course,
stuff. And how much do you think those guys would want to put in a portfolio? But it's really the mindset of how do they look at that in terms of risk tolerance and stuff, as well as how do they manage their expectations? Because, a lot of people I
Yeah.
see do not like to see a 40% drawdown.
Exactly.
They don't feel real good, and it's like the end of the Western world or something like that.
Exactly. Well, look, I mean, this question really depends on who you are, individual, all the way up to institution. The entry point for crypto tends to be Bitcoin. And for institutional investors, it tends to be the managers themselves probably buying a bit of Bitcoin, getting a bit of exposure. And for individuals, I mean, it's just one of those things where, as we advise individuals, even family offices, like if you're going to buy Bitcoin, put in something that you feel comfortable just getting that drawdown or losing, you know what I mean? Something that is probably smaller than what you're putting into other sorts of indexes and stocks, and take a longer term approach on it, 3-5 years, that sort of thing. But if you're managing capital for an institution or want to be a bit more conservative, that's why we exist. Whether it's an index, so that like if the Bitcoin has drawdown, there's something else that can help balance it. Or what a lot of folks prefer is venture. For us, venture includes equity, which won't be marked up or down until there is a significant event. So, that usually takes, 2 to 3 year cycles. And, I think for us, like, our venture funds have historically had 10x plus returns. So hopefully always be up, but we'll see. But then again, like we have the hedge fund style stuff that does have a little bit more volatility. And then the special opportunities and early stage token investments, again, kind of in between fully liquid and volatile and equity and stable. So having that diversification across strategies and all different types of assets, and then of course in a vehicle that is 8-year vehicle, is comfortable. So it's like, well, we're putting the money in there. It's a balanced approach, balanced volatility, and we're up to sort of like the venture style discretion of the managers to be able to distribute those funds over a longer period of time. Oh, I don't know who raised their hand first. What, whichever person wants to go first.
Thanks, Paul. Really, that 1,300
extra return. Thank you.
The 2013 fund, or what vehicle were you investing? I have 2 questions after the first one. Which was the fund invested on that basis at the 1,300x?
That was the
passive fund.
It's the 1,300x return is the Bitcoin fund. I don't think the Bitcoin, it's the passive fund. Yes, it's passive. I don't know if you guys can see my finger right here.
Oh, right.
Yeah.
Okay. The other question was just from a regulatory perspective. You're mentioning risk reward, and obviously people in the world are pretty happy that Gensler.
Yeah.
But what does that look like going forward regulatory wise? You have, I don't know how many tens of thousands of cryptocurrencies there are in the world, and yet Democrats in Washington who refuse to rule on whether they're commodities or securities. How does that regulatory uncertainty affect your decision making as an investor? Do you, at any point, do you feel like there's risk to currencies that, you know, on which we don't know whether the government's going to regard them as securities or commodities? You know that.
Yes.
For running things, it's his whole concept was
Everything's,
enforcement.
yeah, exactly.
Rather
Enforcement,
than-
everything
rather
is
than
a
like
security.
Smart decision on ruling which way it is.
Yeah.
You decided to sue people, which is kind of terrifying.
Exactly. Well, I'm glad that we're moving to new administration, and we do have a slide around regulations, which I'll talk a little bit more about, like what could happen in a new regime. But just quickly on our diligence, I mean, yes, like we take regulations very seriously. We take security very seriously. So every single time we're interviewing and due diligencing a company, we, based off of jurisdiction, we figure out like what is the risk and how they should sort of navigate everything from like, you know, which tokens they should list and how they think about their listing process for future tokens and how much risk there is with, you know, exposure to these assets in general. Great. Let's go on to the next slide. Great questions, by the way.
Latency.
Okay, no worries. I think, why don't I just pull up the deck just, and I can answer another question too in the meantime. Yeah,
It's up right here.
okay. Yep.
The four kind of buckets that you have up there. Where do you think your AOM is most likely to grow in terms of opportunities for deployment?
Opportunities for deployment.
Well, for instance,
I
would you do
mean-
more in late venture, would you do more in special opportunities? You know, where do you see, you know, basically opportunities to invest more capital? Almost like the most, where would you like to put more capital? In terms of getting it?
Yeah, I mean, from a availability perspective, I mean, the liquid markets are, I mean, you can deploy as much capital as you want in there. I would say that the way that we've structured our venture fund, which I'll, you know, end on at the end, is really we're doing about 40% equity, 30% early stage tokens. That would be investing into a token project like Ethereum before the public, I guess before the listing process, I guess pre-IPO in a way, but pre-IPO in like the earliest of stages, and then about 30% in liquids. So if you look at it, venture is supposed to be the largest bucket. I think that's sensible. Privates versus public, 70% privates, 30% public. I think there's an opportunity to be doing hopefully a lot more mid-stage investing. Right now, for the most part, it's very, you know, early in the space, so a lot of C to Series A, but we're going to start seeing these companies just do very well, right? And so there's not a lot of folks that are going to do growth stage investing or mid-stage investing in this space, especially, you know, there's just a lot more conservative on the growth stage side of things. They're not following the space as much. So there's an opportunity for us to deploy a lot more capital, way more competitive advantage there. And so this is our framework for how we're investing right now. We're looking at gateways, developers, and applications. These are the categories that we think really matter to push the space forward. Gateways are things that are really connecting the legacy financial system to crypto, decentralized finance, et cetera. So stable coins is one way of connecting, you know, dollars to, you know, tokenized dollars, tokenization. We think a lot of other currencies are going to be tokenized. We think stocks are going to get tokenized. So capital markets are going to be moving on chain. We also think this enables things like payments. Payments is really going to be probably the first initial killer use case for crypto. We've already seen in one use case, 9% of the remittances between US and Mexico all done on crypto. No one knows about it. I think that's kind of where we get to the application side of things. Users are going to come into this space probably not knowing that they're using crypto. That's probably how it's going to work. We have a lot of these intermediaries, WhatsApp, Telegram, PayPal, Venmo, that are providing access to crypto. And then we're going to start seeing things like Robinhood and Revolut, where you're just on another fintech app, and all of a sudden you're able to get yield on your money. You're able to send money across borders it's all happening on crypto. You don't need to know about it. And then on the developer side of things, it's been challenging, especially when you have more than one blockchain. How do you move things around different blockchains? It gets really complicated. So the more that we can focus on removing the complexity and the speed to develop applications on blockchain, the better. And we've invested into what we think is the Amazon AWS for blockchain. I'm actually on the board. We led the Series A. It's been like a 70, 80x investment so far, but they are basically building the tools and the APIs for anybody to run an application on blockchain, get data, be able to spin up their own blockchain, et cetera. Yeah, go for it.
So your application.
You can move to the next slide just so I know it's latency.
Liquidity and leverage, like you hear about like Mike Overgrads of Galaxy and different people.
Okay.
Liquidity coming into the market.
Yeah.
No, unless you're close to the service. Would you say, since you've been in the space so long, that there has been more liquidity or not as much as people are?
The question is about liquidity in the marketplace.
Yeah, I do think that there's been more liquidity, but we're not seeing the delta until I think maybe this year. This kind of gets into this section a little bit, but I'll just kind of like give on a high level. We're, post-election, I mean, things have just changed. We're seeing companies in our space getting calls from Charles Schwab, Fidelity, the big banks, all these guys saying, oh man, like we're actually getting a lot more comfortable offering crypto to our clients. We're actually getting a lot more comfortable doing some stuff on tokenization in crypto. So these guys are phoning our companies, looking for ways to work together. And I think that means that we're going to unlock through these intermediaries a lot more retail flow and hopefully a lot more institutional flow. That's where we're going to liquidity from.
I think it's pretty important that there's actually a guy, David Sachs, who's going to be
Yeah, I love David. He's great.
the head of crypto for the government, right?
Yeah, crypto and AI. They're lumping crypto and AI together. That's also a good thing too. Tokenization. So I talked a little bit about this already. I mean, look, tokenized dollar, tokenized stocks, tokenized credit, bigger markets. Founder Mike Cagney, he started SoFi, $10 billion company. He's put $4 billion worth of tokenized credit on chain. So again, we're going to see a lot of stuff moving on chain, starting off with capital markets and stable coins. But we can start seeing things like collectibles and loyalty points, and it just tackles so many different areas. And we'll talk about some of those areas later on too. Move to the next slide. AI, yes, we are doing AI related stuff, of course. Where crypto really enables AI is really around just the openness of the architecture of crypto and the ability to be able to make things private, even on a public blockchain. So, if you want to have better AI, you need to have better data. Well, what if you can incentivize more folks to contribute data and then be able to even clean up and verify that data all in sort of like an open community? That's really interesting. What about these models too? Like, how do you make better models? Well, what if you contribute a model and actually get paid for that model if other people use your model? These are things that can be fixed and enhanced using blockchain because you can attribute these different models with ownership, with economics, all on a blockchain. And then lastly, these AI agents. I mean, I would love for some AI to be able to trade all my crypto and get me some amazing returns and displace venture capital and Pantera. I don't think we're anywhere near that, but I think there's a lot of things that AI could do around just simple trading requests and data collection, all that kind of stuff. So
We have about 10 minutes.
Yep, sounds good. Let's keep going. DPIN is another one. I'm just going to touch upon some of the use cases here. We can decentralize the ISP network, how people get internet faster, cheaper internet. Mapping is another area that we've looked at. And also compute is another look at. Again, like being able to compute AI in a more decentralized fashion, enable people to want to contribute their resources and then just make it cheaper. So let's go to the next one. So this is why Pantera is really powerful. We have invested into amazing founders and partners all over the world. And it starts a flywheel where these, we've been able to then sort of build a lot of conviction with these founders and build success with them. And then we provide a lot of value-added resources around help with regulations, help with tokenomics, how we go to market. And then lastly, like the other thing that just helps out is, we push the industry forward. We do events like this. We go to TechCrunch. We talk about Davos and all this kind of stuff. Like we started off 11 years ago as the rebels, and hopefully now people are just a lot more comfortable with the space, and we'll continue to just put out really good content around what's going on in the industry.
You're a great evangelist for the space. I mean, there's no doubt about that. So
Thank you. So industry inflection point, let's go through this. Again, Jamie Dimon, JP Morgan, Bitcoin is dead, crypto is dead. A lot of people really just, negative about the space for a very long time, especially around the banks. There's been things around like banks not wanting to work with crypto companies, Operation Choke Point, all that kind of stuff. Hopefully we've gotten around that. Let's keep going. This is more just kind of highlighting what we've had to overcome. Obviously, we went through a bit of fraud, Sam Bankman-Fried, and even some banking issues like SVB. But again, the worst things that could have happened and the SEC, the worst things that could happen to Bitcoin, we feel like are behind us. Let's keep going. And what is happening right now? We talked about regulations. I mean, look, we have a Bitcoin ETF. Trump is all in on crypto. He's got his own cryptocurrency. Ethereum ETF gets approved. And now we're kind of off to the races in terms of a new administration that we think is going to prevent a Operation Choke Point where banks can actually work with crypto companies, and also fix some other regulations around stablecoins, maybe even a Bitcoin reserve.
I just wanted to get your perspective maybe on like payments. I've known a number of payment companies who've like, is it open, is it closed, no change? Can you just maybe talk a little bit about that?
Yeah.
Because I definitely see the case.
Yeah.
Payments,
Right now, all of the payments were done on Bitcoin because it had the most liquidity. Now payments are being done using stablecoins as FX. Usually USDC, but I mean, there's other sort of stablecoins that could fit into the picture. And so I think we're just going to see a ton of different types of stablecoins, not just like volatile coins. And the problems that are going to be solved around there, there's already $192 billion worth of liquidity for stablecoins. So that's what we can really tap into for liquidity. And then on top of that, we just want to make sure that people are able to on-ramp and off-ramp into these stablecoins in a very compliant way. And then, of course, scalability. So outside of Bitcoin, Ethereum is actually where these stablecoins are being sort of used. And then next, I think, would be Solana. Those are the top contenders for blockchains that are going to facilitate these payments. Let's go to the next one. Look, I mean, red sweep. This was the best outcome that we could have had for the election. I think there's going to be an ease at which to be able to get, legislation passed. There's already talks of correcting some of the things that have happened in the past around banks and also stablecoins. And again, more clarity in regulations, maybe even a Bitcoin reserve. I think there's just a lot of tailwinds. And we think that this is going to expand globally too, which is going to be helpful. A lot of people are going to look at the US for regulations.
do you think there's anything analogous between Bitcoin and junk bonds? So, I mean, junk bonds obviously had a very negative experience when Milken was arrested and everything else. And actually, a lot of the banks got bailed out as a result of Resolution Trust. They had to sell their junk bond assets. So Apollo actually was created based on buying these junk bond assets from banks at 5 cents on the dollar. And then you saw the same thing happen last year with like the Silicon Valley banks and the banks in New York all happened to sell their crypto assets, and now it's 100% turnaround on that. So you think might be an analogy there, or?
I think there might be an analogy where, again, like now we're seeing companies diversifying into Bitcoin as their reserve. Governments now looking at Bitcoin as the better way to sort of I think so for sure.
Yep.
All right, let's move on. I mean, now we kind of get into exactly that reserve, using this as sort of treasury, a better gold. That's what we're seeing Bitcoin is really. I mean, look at the ETF flows in Bitcoin versus the largest gold ETFs. The great thing about Bitcoin versus gold is that you can't make more Bitcoin you can still actually mine more gold. So that's kind of cool. This cap supply of Bitcoin. And I mean, look, there's still an opportunity here. Gold's at 200 billion, Bitcoin's at 6, whatever, like 6 billion or something. So there's a lot more upside. And then these are the other markets. I mean, the adoption rates are still in the single digits for a lot of the continents out there. And these are the industries outside of just gold that crypto could sort of disrupt. Everything from payments, bonds, equities, real estate. I mean, these are trillions of dollars. So we're still in the early goings.
I think there was an announcement that Syria is considering using Bitcoin as a side transactional. It was announced yesterday.
Yeah, I mean, that's, there's a lot of momentum right now. So we're excited.
Actually, there's a better one.
Yeah.
And it's the fact that somebody said, what will be the currency on Mars? Said that it will be Bitcoin because to carry that gold to Mars
Yeah.
would be too heavy.
Exactly.
Space capsule.
Yeah, hey, storage of Bitcoin. I can store my Bitcoin digitally. That's
Yeah.
it's gold with the use case and easy transport. That's basically it.
Yeah.
And look, the last slide that I have, and then I'll get into the fund, is really, look, this is a paradigm shift for the industry, regulation tailwinds, the fundamentals, the use cases, they're all really appearing right now. Capital flows, as that gentleman mentioned, are really primed to come in, retail and institutional. And look, I mean, it's early, but the risk reward is just tremendous. And so the last slide, Marty, if you want to just like go on, is really just our venture fund. We're gonna raise $1 billion. First closes in June. It's venture equity, early stage tokens, that special opportunities, and liquid tokens. We feel like we've been a great partner for a lot of folks here, and so we'd love to have you guys be a part of that.
And you guys have some ongoing events. You're going to be in New York in February, I think, right? Is that correct?
Yeah, we have a very large team now, 80 people. And so Dan spends a lot of time in New York. I'm in San Francisco. I'm going to go to Asia in mid-February for a conference over there, and over in Europe in March. So we're all around. Yeah, just I think we have a calendar on our investor letter that kind of shows like where we're traveling.
And I guess the question is, and hopefully you'll get the list of all the registered, said about 350 people registered.
Sure.
But maybe the people in the room can can respond and ask if they're on your mailing list. Do people here receive the Pantera emails? Yeah, so they have a fantastic mailing list, regardless of whatever mailer, regardless of whether you're in Bitcoin or with Pantera, et cetera. I highly recommend it because it really gives you a level set on where the industry is. So
yeah, you can go on our website, pantera.capital.com, and subscribe to our investor letter. It's great. As both the big venture and institutional capital allocator.
Yeah, I had to, so Dan posted something on LinkedIn, and I think it was in your newsletter too, probably 2 or 3 weeks ago. It was about how Bitcoin had declined to $65 in 2013, and he was going to buy 35,000 coins, right?
Yes, exactly. We had partners at the time, so he was like, look, I have so much conviction. I want to buy 35,000 of Bitcoin, but look, I mean, if you guys want a part of that, great. If not, I'm just going to do it myself. So he had conviction very early on.
And something that's interesting is that we had Tim Draper speaking in Miami a year or two ago, and he said the breakup of Draper, Fisher, Jurvetson, or whatever it's called, what happened because the partners did not agree to purchase Bitcoin. So he went in on his own and bought the Bitcoin from the FBI.
Exactly. I mean, Tim has been just an early supporter of Bitcoin, and both of those guys, Dan and Tim, enough Bitcoin where they're just going to do it. Enough conviction on Bitcoin where they're just going to do it regardless of what other people think.
Any other questions from the audience? Fantastic.
All right.
Paul, thanks so much.
Thank you very much, guys.